Hello, hello. What the hell's going on here, man? Hello, hello. Yo, what's up? What's up? You guys can't fucking hear me? You guys hear me? Yes or no? Oh. Yes, yes? Okay, okay. See? That's why I always do those checks at the start, just in case, right? I was saying hello, hello like 100 times. All right, now you guys can hear and see everything. Okay, perfect, perfect. Let's just jump straight into it then, shall we? I was just having an issue with this microphone here. All right, perfect, everybody. Let's jump straight into it. Okay, the first thing I want everybody to understand, and something that I've been discussing in the private channel a lot, is a lot of people have been confused over the last couple of weeks of why gold has been bearish, commodities like oil have been more bearish, the stock market has been more bearish, but the US dollar has been a lot more bullish. And I'm going to give you the explanation for that now. Basically, ever since the week of April 22nd, and you guys can go back check this date as well, during the week of April 22nd, there was a meeting with various central banker heads. Bank of Canada, Bank of England, Euro Central Bank, and Federal Reserve, where they all met and gathered together for a meeting with the IMF, okay? At this meeting, we got rumors and signals from all the various central bank heads about combating inflation, needing aggressive rate hikes, and especially from Jerome Powell in the Feds, that we're going to be seeing consecutive 50 basis point rate hikes until we are normalized back to a 2.5 to 3% interest rate range. Okay, so one more time. The week of April 22nd, major IMF meeting where all the various central bank heads got together and they all brought a more hawkish tone to the table. This including Bank of England, Euro Central Bank, Federal Reserve, and Bank of Canada. As they started to give more signals towards interest rate hikes, and of course the FOMC and Fed interest rate is this week on Wednesday, what we have had happen over the last couple of weeks is investors and smart money pricing in those rate hikes to come. Interest rate increases is a bearish fundamental factor for gold, is a bearish fundamental factor for commodities, and is a bearish fundamental factor for the stock market, but is a bullish fundamental factor for the US dollar. This is the main reason over the last 2 weeks, and even at the start of this new month, gold has been trending down and a lot more bearish. Stock market has been more bearish. Oil bulls have softened with more bears in play, but US dollar has been a lot more bullish. This is the reason for GBPUSD downside, EURUSD downside, and USDCAD upside. Does that make sense for everybody? So what it's looking like, in my opinion, as over the last couple of weeks, the markets have been adjusting to the rumors of rate hikes, buying the rumor in terms of dollar going up further. It looks like at the actual Fed interest rate meeting on Wednesday at FOMC, in terms of US dollar, it's going to be buy the rumor, sell the news. And on the stock market, it's going to be sell the rumor, buy the news. Okay? So that's what's been happening. That's the reason why gold has been more bearish. That's the reason why commodities have been more bearish. That's the reason why US dollar has been more bullish and stock markets more bearish. Japanese yen, though, individually is still very bearish on the higher time frames, as last week the Bank of Japan still kept their interest rates in the negative, still keeping their unlimited bond buying program going, and still keeping stimulus active. Bank of Japan is one of the last few central banks still keeping that dovish tone, as even the ECB is starting to become more hawkish, talking about future rate hikes. So the majority of currencies against the yen are still very bullish, but the majority of currencies against the dollar are far more bearish. Okay? This sentiment of pricing in these rate hikes looking like it's still going to hold some more weight all the way until FOMC, where FOMC on the US dollar is going to be more buy the rumor, sell the actual news, and it looks like we've been seeing price setups for FOMC. One thing we want to keep in mind though, as we have FOMC on Wednesday and we just started a new business month, is it's going to be very high probability of seeing lower volume and volatility or potential intraday ranging on our currency pairs until we get some more information for the markets to price in from the actual Fed interest rate decision. But the expectations of a 50 basis point rate hike is already well known, is already getting priced in, and has been well known since the week of April 22nd IMF meeting with the central bank heads. Does everybody understand that in the chat real quick? Does that make sense why gold has been bearish, why stock market has been bearish, why oil has been more bearish, but dollar so bullish? And we can also understand why Japanese yen has been more bearish as Bank of Japan is keeping interest rates low. Okay? Okay, perfect. I just wanted to make sure everybody understood that. So in terms of market sentiment, US dollar, when we're looking at the dollar index, and we're going to go check that out in a second, has still been very bullish. Japanese yen is more bearish, and of course equities are more bearish, both fundamentally and technically, and we'll break that down during our analysis, of course. We can see that when we're coming here and looking at some of our sentiment indicators, with the Japanese yen in extremely bearish market structure, you can see after sellers printed these lows, we had a minor pullback phase and continuation moves to the downside, primarily being induced by a dovish Bank of Japan. But from the April 22nd IMF meeting, dollar has been more bullish as investors and smart money have been pricing in more rate hikes to come. We can also see the volatility index edged up all the way to this very key intraday zone around 34 over the last couple of weeks as well. And you can look at the dates, right? Here on the dollar, you can see an extremely strong bullish rally since the April 22nd. Here on Japanese yen, you can see more of the bears, and especially since the Bank of Japan meeting. Here, when you're looking at the volatility index, you can see since April 22nd, that's why we had continuations to the upside. And then when you're coming here and looking at your global equity markets, ever since April 22nd, we've had a lot more downside overall here in global equity markets and a lot more softness overall. Okay? So it does look like we're still going to see that little bit of downside on gold, a little bit of further downside on the stock market, and a little bit more upside on the dollar, all the way until FOMC, where then FOMC, more than likely in my opinion, if the Feds keep the interest rates at just doing a 50 basis point rate hike, which is already well known and priced in, more than likely it's going to be a buy the rumor, sell the news for the dollar, and dollar will end up turning a bit more bearish, especially at the key price point of interest we are at. I want to show you guys something very significant here on the dollar on the higher time frames. You can see the dollar is at and nearing these very, very key resistance zone around 104. If the Federal Reserve on Wednesday just does the priced in 50 basis point rate hike or less, then we're going to see that the rumor was bought in, priced in, and more than likely dollar will have a pullback from these highs and some short-term downside, as well as the stock market more than likely will have a bounce from this demand zone in lows and a continued upside. And also I'm expecting more of a gold rally and bounce at FOMC as well. If the Feds just do a 50 basis point rate hike, which we've already had those rumors from the April 22nd IMF meeting, and if they do even less than a 50 basis point rate hike, then we're going to see the stock market bounce, dollar turn bearish, and gold bounce. But just one more time, The reason since April 22nd why stock market has been bearish, the reason since April 22nd why gold has been bearish, and the reason why dollar has been so bullish is because those rate hike rumors have already been getting priced in by the markets. Buy the rumor, sell the news on the US dollar. Does that make sense for everybody? I really see what we've been having happen since April 22nd and that pricing in, just setting up for an FOMC, where FOMC is going to just do the generic expected 50 basis point rate hike, and more than likely gold will spike down and have a buyer's bounce, and dollar will end up turning a bit more bearish from these highs and doing a pullback from these highs. But FOMC is of course on Wednesday, and we still have a couple of days until then. So we're going to be doing some intraday analysis in terms of some intraday trade ideas and scalp trade ideas pretty much until we're setting up for FOMC. So for the time being, we're still looking to play US dollar strength as we're just at the same intraday highs. We're still looking to play Japanese yen weakness, and we'll give some individual analysis on the equity markets in a second as well. But one thing I want everybody to understand is we are starting out a new business month with a lot of the interest rate hike rumors from the last couple of weeks being priced in. No new fear, uncertainty, or doubt with Russia tensions. Just been the same type of headlines repeating. Nothing in terms of new events that's impacting market sentiment. So with FOMC on Wednesday, start of a new monthly period, very strong moves we've seen over the last couple of weeks, we do have the expectations of lower volume and volatility. If you see some more intraday ranging on your currency pairs, don't be surprised as the markets are waiting for some more information from the Fed interest rate decision, where they're basically looking for two things. Are the Feds just going to do the 50 basis point rate hike, which has already been rumored and is already expected? If that's the case, it's a buy the rumor, sell the news. Gold will bounce at FOMC. Stock market will bounce at FOMC. Dollar will turn more bearish. But if the Feds do a surprise increase rate hike of 75 basis points and they're showing a more hawkish intention, then gold will continue bearish, stock market will continue bearish, and dollar will continue bullish. Does that make sense for everybody? I just wanted to give everybody that information about what's been happening over the last couple of weeks, why the markets are moving this way fundamentally, and my expectations of FOMC before we jump into some of our trade ideas for scalps and intraday trades. So do those fundamental points make sense for everybody in the audience, and also the expectations of FOMC sentiment? Okay, nice. So now let's jump into our fresh analysis for some trade ideas for the next coming sessions and tomorrow, because again, we still have a couple of days until FOMC, but that's what our main focus is this week, okay? Okay, before we jump into our analysis, we just want to make sure we have a good understanding of what economic events we have on the docket. So it's currently Monday, May 2nd, and oh yeah, I forgot to tell you guys. Yes, Rage is correct. I also forgot to tell you guys, we do have a bunch of holidays until FOMC as well. So we've had Asian markets partially closed. We were just coming off a UK and Ireland holiday. China markets are closed. Japan has a holiday as well. India has a holiday. So on top of having the start of a new monthly period, investors waiting for FOMC, and these holidays active in Asian regions as well as Euro, expect lower volume and volatility pretty much until FOMC. And after FOMC, just take quick jabs at the market. Quick jabs in and out, following your pre-planned analysis. Don't have high expectations really until post FOMC. You know what I mean? Okay, other than that, in terms of economic events on the docket that we just want to understand here, we do have Reserve Bank of Australia cash rate over the Asian session, where they're expecting an increase in interest rate. This is already well expected. Ever since that IMF meeting, the majority of central banks have been a lot more hawkish, except the Bank of Japan. Then, overnight during our London session, at 3:55 a.m. Eastern, we have some unemployment change data for Germany. I'm not expecting this to have too much market impact at all. It's really not going to do too much. Unemployment rate has the same expectations. If anything, it'll keep euro relatively softer and weaker. Okay? Then at 4:30 a.m. Eastern, we have some UK manufacturing PMI. This is going to be pretty important for our UK bias overnight, where if this data is still good and above the 55 range and above the forecast, this can help us with some GJ buys, as we still want to play some Japanese yen weakness. Then at 5 a.m. Eastern, during Asian session close in the new 4-hour candle, we have some producer prices inflation data from Eurozone overall and unemployment rate. They're expecting some rebounding data from Eurozone overall, so more than likely we're going to see Euro USD primarily ranging. Then milk auctions isn't too important for us, but pretty much at 10 a.m. Eastern then, during our North American trading session, New York trading session, we have both monthly factory orders and JOLTS job opening. I'm expecting very strong data on factory orders, which is primarily going to keep US dollar bullish in my opinion. Okay? So now let's look and do some analysis. We're still looking to play our US dollar bullish bias, but to validate any more US dollar bulls, we do need a break above these current highs. You can see as buyers printed these highs, we had a minor pullback phase, more buy orders collected that had enough buyer volume to revisit these highs. From a technical perspective, as manual retail traders, what would show us a lot more buyer volume and continuing to play the dollar bullish bias would be dollar trading above 103.5 and continuing to the upside here, which it does look like we can primarily do overnight, or have a minor pullback before continuing to the upside. Japanese yen here is still bearish both fundamentally and technically. This impulsive sell side move that went to new lower lows was induced by a dovish Bank of Japan sentiment, one of the main reasons GJ had an aggressive bounce from a very key fundamental price point of interest I'll show you guys in a second. So I still want to play yen weakness, and I still want to play dollar strength, at least up until FOMC. When we're looking at gold here, gold is still respecting intraday bearish market structure. Yes, the higher time frames are bullish, but gold could easily come down into the 1840s, retesting this key price sensitivity area and order block to the left, and setting up price for FOMC before seeing an aggressive bounce at FOMC. What we can see in terms of gold structure is some bearish market structure forming from these high points, with sellers consistently printing lower lows. Again, one more time, pop quiz. Why has gold been so bearish ever since April 22nd? Quick pop quiz in the chat. Let's see who's paying attention. Why has gold been so bearish with sellers more in control since April 22nd? Correct. So, we're still seeing sellers print lower lows. We only have these short-lived pullback phases before continuing to the downside. What we can also see is we are trending well below this very key higher time frame demand zone. We have this bearish market structure. We still have US dollar strength. And we still have sellers in control. I could personally see a pullback play to retest these previous lows, or just a drop below current lows going into the 1840s before seeing a bounce at FOMC. So up until FOMC, I personally still want to take advantage of playing this bearish price action, bearish market structure, and investors and smart money pricing in the interest rate hikes to come from the rumors we had at that April 22nd IMF central bank meeting. So when we're looking at gold here, I see a couple of things on the intraday time frames. For the new daily period, if we come up to revisit these previous lows at 1883 or 1876, I'm looking for continued sells to the downside. This is around the previous low area here, which it looks like we would just have a short-lived retest before continuing down, or breaking below 1855 and 1852 sells with targets of the 1840s. Okay? I personally don't see gold buys too valid unless we either, one, get the price set up for FOMC, where they just do a 50 basis point rate hike and gold bounces, or we would really need gold breaking above this bearish market structure, trading above the 1900s. Otherwise, there's no point fighting this current trend. Investors pricing in those rate hikes to come, sellers consistently printing lower lows, any of the pullback phases being very short-lived, just having us push to price areas of interest, collecting more sell orders before continuing down. Okay? You can either intraday trade these setups or scalp play the momentum as well. That's up to you. But these are the price points of interest I see entries for potential continuation gold sells. Setting up for FOMC to come on Wednesday. Time frame is 4 hour. You can see in the back here. Okay? Does that make sense for everybody? Now let's do some analysis on GBPJPY. Now, this price sensitivity area here, around 159.5. In Capital Hungry, we were calling buys from this area. The reason why this price is very significant on GJ is during this date here, around March 25th, we had Bank of Japan announce an unlimited bond buying program. This meant that the Bank of Japan was still keeping stimulus active and doing an unlimited bond buying program, which means the Japanese yen is still heavily oversupplied in terms of their money printer. Their money printer is still going off. Okay? So what we had happen is this large impulsive move here was Bank of Japan unlimited bond buying program. That fundamental announcement and headline led to some impulsive Japanese yen weakness, which led to GJ pushing to the upside from this price point here. The reason why it's important is you can see we had a pullback to this price point, double bottom, and then due to this fundamental catalyst of yen weakness, we came all the way up to these higher highs printed by buyers, right? Then as we had some short-lived market fear, Japanese yen doing a pullback from lows, and that IMF meeting bringing some more uncertainty and doubt, April 22nd, you can see we had some short-lived downside and aggressive pullback all the way to that exact same fundamental price point. And guess what happened here once we hit this price point? Bank of Japan interest rate decision. Okay, so it's extremely interesting to me how this significant fundamental price point of interest, where late March we had a headline and announcement of Bank of Japan introducing an unlimited bond buying program at a fixed rate, You don't have to understand the details, just understand that was bearish for the Japanese yen. A very large impulsive move, correction, respect to that same demand zone, huge bullish rally to the upside. Then, the IMF meeting brought some fear, uncertainty, and doubt, which led to profit taking by buyers from these highs and a pullback in short-lived bears all the way to that demand zone, setting up price for Bank of Japan interest rate decision, where Bank of Japan was dovish and kept their interest rates low. This is what led to this impulsive move here. Okay? So on the higher time frames, GJ is extremely bullish. Even if we get a retest of these area lows, I'm expecting still extended buys to the upside and GJ potentially trending bullish to go back up to 167 highs. We have more of a hawkish Bank of England, which is bullish for the British pound, while at the same time we have a dovish Bank of Japan, which is bearish for the Japanese yen. We can see the respect to this demand zone and fundamental price point of interest, and we can see, especially on the higher time frames, this little pullback that's happening right now is really just the new monthly period here, grabbing some liquidity and setting up some order flow. Monthly, weekly, daily, all extremely, extremely bullish. Even when you come and look at the daily here, we could come and retest these previous price sensitivity areas and still be extremely, extremely bullish on GJ. So on the higher time frames, intraday time frames, and fundamentally, I am personally bullish on GJ still. This is what I would be looking at on GJ personally. Now, you can see we respected this demand zone here on the intraday time frames, as we had the new monthly pullback here and failed to break. Let's zoom in now. Trade ideas. If we have the new daily candle come to these lows, fail to break, then come above 166.5, I would start to look for GJ buys. As long as UK equity markets have that little bit of a rebound from that support being created, we have a break above 162.800 and 162.5. I would be looking to scale in buys from the green boxes price points of interest. Hawkish Bank of England and GBP more bullish against the yen. Dovish Bank of Japan keeping the Japanese yen more bearish. We can see yen structure individually when we're looking at the yen currency index. Very bearish there as well, with sellers consistently printing lower lows. Okay? I would only adapt to sells if we break below 162.2. My main bias is buys and seeing potential bottom being created, buyers jumping back into the from this higher time frame key level in demand zone, and starting to see some more upside playing the yen weakness. The only way I would shift my bias and take sells is if my buys are incorrect and they don't play out, and we break and retest below 162.2. This is my secondary bias, my adaptive bias. This is my main bias and main expectations. But obviously, as manual retail traders, we have to be very adaptive because we're not always going to be right with our predictions and analysis. So marking out both sides of the coin in terms of trade ideas gives us more areas to be adaptive and take advantage. But it's always good to have your main bias, your main expectations, and then have criteria of what you would need to shift out of that bias and look otherwise. So main bias is this. Okay? Now, GBPUSD, EURUSD going to be very, very similar here. Remember, we're looking to play that dollar strength. The reason why GBPUSD, ever since April 22nd, right? Look at the date. April 22nd, the reason why GBPUSD has been so bearish, the reason why EURUSD has been so bearish is because markets have been pricing in those Federal Reserve rate hikes to come. The US dollar is your world reserve currency, your global business currency. regardless of what currency pair the US dollar is in, it's going to hold a lot more weight, okay? But what we can start to see both on GBPUSD and EURUSD to start this new month is after having extended sell side, we're starting to potentially consolidate at these lows here, which I'll show you guys across the board, right? So we're still bearish, but we can't expect any more sells unless we were to break these lows now, which it wouldn't be out of the ordinary that we could start to see these pairs range until FOMC, where at FOMC, if they just do a 50 basis point rate hike, you're going to see these pairs bounce from the lows and have an aggressive pullback from the lows. But obviously FOMC is still time away. So when we're looking at GBPUSD, we still have sellers consistently printing lower lows, bearish price action and market structure, as sellers printed these lows here and reacted to the key level 1.2415, we had some short-lived pullbacks, which was just profit taking by the sellers, pushing price up to a more favorable supply zone to collect more sell orders before continuing down. I can still see up until FOMC that we could possibly at least revisit these lows when we're looking at GU. On GU, even pullbacks to these highs again, I would still be looking for sells in these areas. And you can see the price points to the left labeled out, okay? Dollar still holding some strength in the short term. We're still having those interest rate hikes being priced in since the last couple of weeks. We're still seeing that price setup active until FOMC. This is my main bias on GU. Sells playing dollar strength, bearish market structure, and bearish price action. I would only be jumping in buys on GU if we come down to these previous lows, fail to break, or if we break above 1.263 key level. But I personally don't see a bounce on GU and EURUSD, and I don't see any dollar weakness until FOMC if the Feds only do the priced in 50 basis point rate hike. The only way at FOMC dollar will continue bullish, GU will continue bearish, and EURUSD will continue bearish is if they do a 75 basis point rate hike or higher, okay? But a lot of the 50 basis point rate hike expectations have been getting priced in over the last couple of weeks. EURUSD here on the intraday time frames is going to be very, very similar, but we want to mark out this medium term zone in case we get any type of intraday pullback for the new daily candle. So sells from 1.058, sells from 1.052 to the next key level expectation of 1.045. Again, still just looking to play dollar strength up until FOMC. Bearish price action, bearish market structure, seller consistently printing lower lows, just had sellers take profit, liquidate positions, creating a short-term pullback, pushing price up to a more favorable supply zone as buyers jump in to provide that exit liquidity with still potential to drive down deeper as FOMC is still 2 days away. The only way I would jump in EURUSD buys is if we come down to this key level, fail to break and bounce, or if we come above 1.0654, which most likely we won't come above this price point until FOMC on Wednesday if they just do the generic priced in 50 basis point hike. Now, obviously EURUSD and GBPUSD are a lot more bearish as you have the US dollar as your secondary in the quote and as the world reserve currency holding so much strength individually here, you're going to have those pairs bearish. But on USDCAD, you can see the inverse. We can see from this very key demand zone, we had a strong double bottom created here. Where this signals a lot more sellers exhaustion, buy orders being collected, especially as we've been pricing in the Federal Reserve rate hikes to come. We still have bullish price action and market structure with buyers consistently printing higher highs and only having these short-lived pullback phases that get faded out before still continuing to the upside. Also, for anybody who wants more confirms on either taking more GU sells and EURUSD sells up until FOMC, when you're looking at dollar index, if dollar index over the next couple of sessions starts to trade above 103.5 in the previous intraday high, that's going to give you pretty easy confirms to jump into GU sells, EURUSD sells, and UCAD buys. But keep in mind, volume and volatility is expected to be lower and slower as we have multiple countries on holiday in Asia Pac region and just coming off holiday in the Eurozone for UK and Ireland. And we're just starting out the new monthly period, and investors and smart money, the market makers, the whales, whatever you like to call them, they're clearly waiting for more information from FOMC, as a lot of that has been priced in over the last couple of weeks. But dollar trading above 103.65 makes a lot of sense to continue our EURUSD sells, continue GU sells, and continue UCAD buys until FOMC. Where FOMC, I think they're just going to do the expected priced in 50 basis point rate hike. It's already been priced in over the last couple of weeks. And then we'll see dollar possibly have a pullback and be bearish at actual FOMC, which I explained at the start here. So on UCAD here, pullbacks to 283, even 276 still buys, breaks back above medium term zone 29 buys still on UCAD. We can't just start to guess dollar weakness just yet or start to guess that FOMC is already setting up price. We're still seeing dollar bulls. We're still seeing UCAD in bullish structure, GU in bearish structure, EURUSD in bearish structure. We're not here to play guessing games. The only way I would sell USDCAD is breaks below 1.27. Also, look at the date. April 22nd, the huge UCAD upside and rally, right? It's all because of that fundamental catalyst of all the price of all the interest rate hike rumors from central banks at that IMF meeting that we already discussed. Okay? Last but not least, US 30 stock market index. So obviously the stock market on the higher time frames is very, very, very bullish. But we're coming down to this key demand zone where we saw, of course, price come down here before when we were pricing in the previous 25 basis point rate hikes and fear tensions from Ukraine and Russia. For those of you who don't remember, this last downside move here, all the way to this demand zone, was, of course, I'm using Icon Terminal. It's $15K a year. I have a license because I have a service. I'm not a broke bum like you, Rel. Yeah, sorry. I wouldn't be able to share a news terminal or make bots or do any of the API if I was using Metastock Zenith. Metastock Zenith is for is the cheap discount singular person version. But me, I got Router's Icon. But anyways, this downside here is, of course, from investors and smart money at that time pricing in the Ukraine and UK tension, Ukraine and Russia tensions, as well as interest rate hikes of the 25 basis points before. This time we've seen the 50 basis point rate hikes from that IMF meeting already starting to get priced in here. So I still see that we can come down, revisit these lows multiple times before seeing a potential bounce at FOMC, with the rate hikes being priced in and FOMC stock market buyers grabbing the dip. No, I got full access to API. You want to know how? I'll show you proof right here. These are all the capital hungry bots and terminals. This is it's scanning the newsroom, which is here. Right? So this is Reuters Icon News Terminal, but these bots are connected to the API. It's not scraping anything. It's directly sourced from the API. But that's a bit too advanced for, you know what I mean, some of you guys. Guys like, what the fuck? Some matrix shit. But anyways, for US 30, I can still see us revisiting these lows. Yeah, I have I don't know if you know, but I have a market research and analysis service for about 3 years now. So I have a research and advisory and a license and contract with Reuters Icon. You know what I mean? Because it's worth it for me, because I can share that stuff with the private channel, so forth, use it for myself. It's just like buying something wholesale in product and then selling it at retail price, but this is just different for data and so forth. You know what I mean? Anyways, US 30, I could still see us driving down to these low points at 32,600, even 32,400 before getting some aggressive buy bounces. So I see us coming down to here for FOMC, then FOMC having a bounce from these areas. But sells from here, sells below these lows, going down to set up at that demand zone shown to the left, with FOMC having an aggressive stock market dip bounce. Okay? Yeah, we got different stuff. Price monitors, crypto bot. This is the Twitter. You know what I mean? No, I pay for, this is just good information that Rel's asking, but for anybody who's curious, whenever you get like an Icon terminal or Zenith, right? This guy knows what Metastock Zenith is. The major difference in cost of price between Metastock Zenith and Reuters Icon and actually being able to share information is paying for the access to the API. That's where all the money is the data access and the public sharing and so forth. You get what I'm saying? So if you want to get this Reuters Icon terminal for yourself, you can go through this service called Metastock Zenith, which is about $100 to $150 a month, but you don't have access to the API. So you can't actually share or create anything with it. But the reason why Bloomberg Terminal or the reason why Reuters Icon license is so expensive is for that data API. That's what we're really paying for. You get what I'm saying? Yeah. But anyways, everybody. So, what we can see here is we've done our analysis across the board. We've gone through the fundamental points in focus here. We went through the fundamental points in focus. We went through market sentiment analysis. We went through our volume and volatility reading. We went through what economic events we have on the docket, of course. And we went through trade ideas and analysis across the board on gold, GJ, GBPUSD, EURUSD, USDCAD, and US 30. You guys can always rewatch this as you wish. All right, everybody? So everybody take care and have a great day. Okay?